All right, guys, I welcome you to the next session because every week I'll be providing one strategy until you guys, but don't forget, guys, it's all about backtesting those strategies over and over and over. Don't use any strategy without backtesting it because it will definitely make no sense. You have to backtest the thing and see what I'm saying if it's true. Now, guys, like I used to say this multiple times that an order block, according to me, by the way, it's not a concept in SMC. An order block is not a concept, by the way. So a lot of people think that order blocks it's part of the concept SMC concept, but an order block, like I said, in SMC, they sat down. Let me write it what we are looking at today. So in SMC, the big maybe SMC guys decided and they were like, you know what, we are going to develop a strategy. We're going to develop a strategy using the concept of demand and supply. As most of you are going to look at order blocks are not that different with demand and supply. It's just that they have rules to consider a valid order block and all that. And order block, by the way, guys, for your own sake and knowing, is that order blocks have these rules down. The first rule of an order block states that it's because this strategy is the same strategy. Those of you in Captain's group is a strategy uses. It's a one-time use. Yeah. So that's the first rule of an order block. It's a one-time use. So don't think that because the other time you bought an order block, since in demand it can be valid, but in an order block is used once. Once that order block is used, it's never used again. So another factor states that we are going to look at them in charts. It should be unmitigated. It should be unmitigated. I'm going to explain what this means. So, guys, since order blocks are one-time use, like mitigation, by the guys, as I myself now I define mitigation. Mitigation is like what we mean like rejections of market, multiple rejections of market. They form what we call mitigations. Let me give an example. If you go to a place after, for example, let's say a bar, you come today and you come tomorrow, that place is no longer new to you because it's already mitigated by you. So I did want to use the example of girls and all that, but unmitigated zones are zones which are very virgin and they haven't been retested by market before. So it means that if a place you have never gone there, it becomes unmitigated. You have never met it. So these mitigations, they are simply like those rejections in market. So where multiple rejections are, mitigation exists because where those rejections are hitting are areas of interest. For example, supply, that demands, we have resistance and support. So it means that if those areas are mitigated, if a demand, an order block has a mitigated, even if it's a week that knocked in the demand, that demand become invalid. It should be unmitigated, like it should be a pure order block, sorry, not a demand, a pure order block, unmitigated. That's what they mean by us. Market has never reached there before. That's what they mean by unmitigated. When they say mitigated, we mean rejection. That means that market has never reached. Remember, it's unmitigated. That's the second rule. And the third rule states that it should lead to an imbalance. So that's the third factor when they're considering a varied order block. So guys, what you should understand and know is that imbalances, we know them. These are zones. These are zones which were not filled recently. They are zones which were not. They are simply zones which were never filled before. And by the imbalances, they don't only occur in market, by the way, even in real life. we have imbalances. Let me give an example of an imbalance. If, for example, I'm facing some little network. In order blocks, you have to know what an imbalance is. You have to know also what mitigations are. That's why I'm going to first explain to you what imbalances are. You understand? So now what you need to know about imbalances, which most of you call them failure value gaps. Let me tell you how they occur and why we have failure value gaps. According to me, so that's what we are going to understand. So this is what you should understand about failure value gaps. If most of you used to go on, they are called pulling ropes. So when you guys are pulling ropes and you put, for example, 7 boys this side and you put 2 boys one side, definitely we all know that the 7 boys will pull that too. So you have created an imbalance, and as long as something is imbalanced, that means that it's only one party that will win. So if one party is winning, that means that it's unfair, not so. So if something is unfair, because unfairness used to be a lot in schools and all that. So it used to be by then in schools a lot. We used to see schools when it comes to PP, those of you who are boys, they bring people who are old actually. For me, I used to play football by the way, and they would bring kids who are very old by them, and we could say, and by the way, we always say this one, to balance, even though we say it in Uganda. Now let me explain to you market what they mean by imbalances. When, for example, reach points in market and there was no presence of a party, let me show you what we mean by the presence of a party. For example, I'm going to draw my simple candles, but please don't draw candles. You consider the ones in market. These candles are not in real life. So I'm just going to draw my simple candles. We see what I wouldn't want. I wouldn't want us to go to the real life yet. The candles are small. Like I said by the way, don't. Like I said, guys. Okay, so anyways, let me use the same candle to make things very fast, because if I try to draw different size of candles, it will be hard. But just I want you guys to understand what failure value gaps are and why market comes back for failure value gaps, because a lot of people are there and don't know why actually it occurs, even though they use them as a strategy. So these are my wicks, but like I said, guys, these are not real candles. It's just an example. So don't say I'm also going to start moving but Meta is making his own chart. I'm not creating a chart. I'm just giving an example. So anyways, this is an imbalance. So we always said that imbalances occur in what we call the 3 consecutive candles of market. So this qualifies to be an imbalance, not so? As most of you, even though back then when you were learning, they taught you that imbalances are simply called FVGs or inefficiency, but it's still the same. Now let me tell you the story that occurs in balances, and we understand what's the real magic in order blocks. Sorry, in failure value gaps, because I've seen a lot of traders who use it as a strategy. By the way, a lot of traders use this as a strategy. So we are going to see and understand why market is attracted towards it, because I know if they were still mentoring, they told you that this way magnets of market. So when you see here, there's something closely you should look at when looking at imbalances to explain them. An imbalance this week means that they were present, because guys, like it or not, anything to be bought has to have sellers, anything to be sold has to have buyers. So when, for example, you see this candle, this is the candle that tells us the story of the imbalance. Let me get my illustration tool. So this is the candle that, sorry, I want the demonstration tool. So this is the candle that tells us that this one, This is the candle I'm talking about. This is the candle that tells us what happened. Here we see the buyers dominating market in this candle, not so? So dominating about this range. So that means that all of the people that came into sellers, all the sellers that came here, wanted to fill up these orders in order for this candle to push up to here. Now what is, let's look at the upper part and we see what it means. Here we see sellers had to come in with a rejection. So here, let's look at what happened. Here, the network is disturbing me, but we shall fix that. Let me see, someone wants to speak, but it's just my little network is disturbing. So Everest, I saw you had a question.
Just I was testing my network.
Okay. I'm also facing some networks. That's why I'm talking, then I go off, but don't worry, I'll be repeating myself. So now let's see what I was saying. So I was saying that here we see sellers coming in down, not to fill up what? To fill up buy orders. But guess what? In this middle part, there's no one there. We don't see presence of rejection by sellers, presence of anything. So it creates that in this part here, we don't have presence of sellers. And anything, if it's not sold, if it only had buyers, that means that it's imbalanced. Like I gave you guys an example that if you ever got football back then in primary and this party had a lot of people who were winning. Okay, I don't like saying strong people, but grown-up people. It means that that team is not balanced. So it means that if something is not balanced, it leads to unfairness in market. So at the same time, this is what happens in market. When market sees fair value gaps, it comes back to fill the orders. It does. Even though they used to tell you it fills fair value gap, it fills orders. When it comes to retail concepts and all that, we come to fill orders at this zone, then we can push or we can continue to the downside. Even though there are three types of fair value gaps that occur in markets, but I'm not here to teach about fair value gaps. I was giving you guys some simple review of about fair value gaps, how they occur and why market is attractive. So if market ignores the fair value gaps and continues to the upside, it means that they left unfairness here. Here. That's why, guys, those of you who have ever read my notes, those of you, I wrote something was called imbalances against the balance structures, whereby I stated that in an uptrend, two types of trends now, two things are occurred. The imbalance structure, let me show you what I wrote about. When market is consolidating, we consider that chart to be a balanced structure. But when market is imbalanced, that's why most of you thought that imbalances are always fair value gaps only. That's why I said most of you know that imbalance is a fair value gap, but an imbalance can even occur in a slight move where a different party does not exist. Let me tell you guys the dynamics between which is in a ranging market. A ranging market states that all buyers and sellers are equal at this price. But when you get a sharp move to the upside, it means that sellers are less. And when you get a sharp move down, buyers are less, hence creating an imbalanced structure in market. That's why, guys, like it or not, let the currency be strong or not, we shall always get up moves, which are uptrends, and down moves. That's why you can never see market making uptrends forever. It's not that. That's why, guys, they wrote a concept and said that there is no price in market that is very low for the bulls to pull back, and there's no price which is very high for the bears. You can't say that sellers can't come to this zone. They can, because as long as a chart is not balanced, by the way, guys, this chart you are looking at represents a lot of economies and they consider it. So, like I was explaining to you guys that fair value gaps are always magnets of market. It has to come back and fill orders, either move to the upside or move to the downside, depending on the type of fair value gap. I remember back in my YouTube video, the video we sent, I explained to you guys how to get a valid order blocks, a valid fair value gaps. Yeah, I wrote about that. That's why I want to repeat myself. Those of you who missed it, you can go and see the types of value gaps we have in market and how to use them efficiently. So I was explaining order blocks and just giving a recap on what imbalances are. Yeah. So I was just giving a small recap. And most of you know these things. So that's why I don't want to overrepeat myself. Most of you know them. Now it should lead an imbalance. Then the fourth factor, which is very important, it says that it the order block, a true order block, it should lead to a BOS or scones. So most cases it can lead or it should have made. So that will have the same. So it depends. So it should have led maybe to a BOS or a change of character. Yeah. So it should have led. We can say maybe it should have led, but I don't want to change here, but hope you guys have understood it. Then the last factor considered a varied order. It states that each market, market, uh, market should not, this is the most important one, should not come from unmitigated zone. Unmitigated zone. I explain to you guys what unmitigated zones are. So these are the five factors we have to evaluate order block. Even though, guys, when it comes to the ICT concept, they went further and stated that an order block should lead to a shelf. But I don't teach, even though I know ICT, I know some of the ICT, but I don't teach ICT. So we shall move with the SMC concept, which is simple. Because if I add in the ICT rules to Jakarta, then now you ask me a lot of questions that I won't answer. But let's move with SMC, which is simpler. And you guys, I don't think any of you guys, which are in the entire their concept. ICT is the best, SMC is the none of the concept is the best. As long as you make money, that's the best thing. It's not about the concept. So the four factors are going to be seen in a chart and how they're effective. The first factor tells us, as I'm going to be drawing here before we look at candles, the first factor tells that an order block should be a one-time use. Let me give an example of this chart. If, for example, here we see market creating an order block. So let me first, because I think I didn't define an order block, sorry. So an order block, guys, is defined as these are simply moves that led these are simply previous moves because order blocks are previous. These are previous moves that led up move or down moves of market. For example, those points that led to drops or led to buys are called order blocks. But it should have the five factors to be valid. Yes, it can be a order block, but it should be a valid one. So, like I said, guys, most of you know that order blocks are a concept, but an order block and a trend line are not a concept. And you shouldn't lie yourself that a trend line itself is a concept. No, a trend line is a strategy. Because I used to ask traders, because a lot of traders used to argue with it. I told them that what's the difference between a trend line and a resistance and support? They told me a trend line shows you that trend. I told them that it still does the same thing as a support and resistance. It's just that supports can exist in different ways. That's why in my concept, I wrote about things about slanting resistances and all that. The trend line itself can be a support or a resistance because market keeps rejecting or keeps bouncing off. So those strategies. That's why a trend line itself, I also teach it. We shall look at a Saturday, one Saturday, and learn how to use the trend strategy. So a trend line is also a strategy. If an order block uses the knowledge of demand and supply. So don't be there and think order blocks are a concept. Bonera, I have these are just strategies that were developed. But an order block has a high win rate, by the way. Yes. So the first factor of this line is varied. Why? This order block can only be invalid if we had previously. Let me show you what I mean previously. If previously we had a move that was like this, if market had come and off, then it went up. When it comes up for the second time, we consider that order block to be invalid. Why? Order blocks are a one-time use. So it should be unmitigated. You understand, guys? So unmitigated, they mean that market should never have come back to this zone. You know what time use and unmitigated like to be the same, but to me they're not. Why? Because something can be somehow, because we are going to look at getting the perfect touches in an order block. So it can be already mitigated but still valid to go up. It can be, for example, we shall look at how to use an order block. If you wait for confirmations, we go to the upside. But when it goes to the upside and comes back, it's now invalid. Why? It's one-time use. So that would differ, by the way. I'll explain more as we move, guys. That would differ. One-time use and unmitigated. It should lead to an imbalance. That means that within this zone, we should have a feather valley gap within the consecutive candles moving up. We should have an FVG. Yes, most of it an FVG. An FVG, also known as the efficient of market. So let me put it in the center so that most of you can see it very well. So we should have an FVG. So this zone is still valid. It should have like a BOS or a change of character. You first look at two zones. Remember, guys, when you are looking at a zone, the order block itself is this move. Yes, it's this move. That's the order block they are talking about. Look at that move, the two things it made. Did it make a BOS to the upside? Yes, it considers this is a break of structure. So if market closes below here and wants to come back, that's not a valid order block. So we consider this zone not to be valid. So it should have led a BOS or a change of character. So a change of character, in most cases, this one can be a change of character. Why do I say so? Because we can find it that yes, it's an order block, but previously we had a downstream structure. This is what they mean. Now previously we had a downstream structure. You understand? So this is not no longer called a BOS, it's not called a change of character. But as long as we're in an uptrend, it's a what? It's a BOS, not so? Because I wrote about it, and BOSs are just called the continuations of market. Every time you see a continuation is a BOS, it means that you're continuing to that side. Market should never come from unmitigated zones. That's the first thing. That's the thing I want to put more emphasis on. I know a lot of traders they are using order blocks, but they have run out of the rules of order blocks. If an order block is coming to a supply level, which recent, okay, for example, let me show you what I mean, guys. Let me show you what I mean. We have this. Let me give you guys what I mean. Let me say this is a downtrend structure. We come to, okay, let me say here, let's say market had reached at this point. Then all the factors, let's say they were valid. We have an order there. Previously, we received a change of character to the upside. Let me say we even have area gaps. The area is not mitigated. But when you come up here, market is coming from unmitigated zone, which was a supply level. This order block, like it or not, let it be perfect, let it not be perfect, it will be respected a little bit and be broken. Why? Because we saw market coming from a level of mitigation. The level was unmitigated. And as long as the level is unmitigated, oh, you wouldn't want to tamper with that order block. But the hook bus said. So when this one is valid, why do we say valid? Maybe you might find the supply itself exists around, let me say at this price up here. It didn't reach the form by inducement. Let me say it was there. Then we received a sharp move to the downside to retest the order. So this would be a valid order block to take buys. Now, a lot of people, most cases, we have what we call the confirmations of market, as we shall look at how to get a confirmation in an order block. Most cases, to get tight stop losses, consider half of this box. Always consider half of this box. Now traders go beyond and say that an order block, if you want to get a valid one, wait for market to come back to retest the second time. Because guys, when you get two perfect retests in an order block, it's very valid and nice. Why do I say so? Never and ever set a break even before the second retest. I know a lot of people will be like, haven't you guys been hit break evens and market goes your direction? Most of you have been happening. It's because you don't know when to set break evens. A break even is set in two ways, or two factors consider a break even. Market should make maybe a strong impulse move to the upside, a strong one, you can say it. Or market should have come back to retest the second time. Once it retests the second time, the zone set the break even. Because after the second time, the third time is always the breakout. So never and ever set a break even before you get a second retest or a strong up move to the upside or downside. So you can always take entries at the second retest here and aim the next mitigation zone. So that's one of the factors of a valid order block. So let's go and look at it in a live chart. Now the question in your mind, I know lots of people have it. What time frames do we get order blocks? People are now going to be asking me that. What time frames do we get order blocks? And I want to tell you that the time frames I like personally, I wouldn't want to say the ones that are valid. Even another block can be got in 1 minute. But the ones I prefer is always 1 minute, it's always 1 hour and 4 hour chart. So those ones will give you a higher win rate and you will gain a lot of money when you use that. So let's look for some live order blocks we see where they were valid and where they were not. So I like using 1 hour because 1 hour order blocks are very nice, by the way, guys. If you guys can also be using 1 hour, you're good to go. But never and ever forget your concepts of resistances and support because, guys, markets, sorry, not resistance, liquidity. The market itself is designed to move on those factors. It moves on liquidity concepts. So let me get an example of an order block. We see, was it valid? If it was invalid, we won't take that order block a serious one. So let's take a look at order blocks themselves. We have one here. Now, why do I say this order block is valid? We are going to list the two factors considered a valid order block. Let me first do my order block. Let's assume this move hasn't yet come, not so? Let's see if our order block was valid. The first factor states that it should be a one-time use. So the first factor is now a valid one. This zone was one time. Market never came back. Not so? It didn't come back to retest it. So it's a one-time use. Market didn't come here. So that factor is correct. It should be unmitigated. This one we see it market. Sorry, the one-time use is at this example. This order block is already mitigated. So these other zones are invalid for the order block itself because market is now invalid to take entries. Why? It was used before here at this level. So that means that at these rejection levels, these were just maybe some simple liquidity stretches to the upside, then move down. So the order block we see it's unmitigated, very nice and beautiful order block there. So the second factor, I told you guys, an order block, you look at this move. What do we see here? We see a BOS to the upside. We see a break of structure to the upside, not so, which is around that price. So even the third factor is valid, we see an imbalance of market, not so? We see an imbalance of market occurring there. Then to make things better, always push back, look back, and see does market come from a mitigated zone. We come to zoom in and we come to see that the next supply is around this price. If market tapped that price, it will be an invalid order. So we come to see that market did what I told you, it didn't reach that supply level. Yes, you see, it didn't reach that. So it would be a valid order. So now here, like I said, to take entries with small stop losses, we can always consider that zone. Put the stop losses slightly below the order block, aim where the order block came from. So we see we got a perfect touch. Now let me show you what I meant by a confirmation. I'll break my structure at 15 minutes since I'm in 1 hour. You know, guys, I have something called correlative time frames. Yes. Correlative time frames, like there are different time frames. For example, if I'm in 1 hour, what do I look at next? So that's what I mean by correlating time frames. For example, there are different time frames I look at. So here we needed a confirmation. Those of you wanted confirmations and all that. Let me see if my structure can break to the 5 minutes. So because guys, confirmations are going in a lower time frame, so you should also take that valid. So Mine can't cut that side. Let me see if I can get. Sorry. Let me see if I can get a 10-minute view. Because for me, I majorly use trader cursor. That's where I can cut a chart. But on these ones, it's hard. I can't cut the chart. But on trader cursor, that's where I use the most. So, anyways, if you could have broke maybe to a lower time frames and all that to get confirmations, within this zone, we have a secondary test, but it's just that my chart has refused. Let me show you where it is. You have to be active. Just we see market retested and move to the upside this candle. Take a close look because market refused us to break it in the lower time frame. But next time I'll take you guys to trader cursor and we look from that side. It's just that that chart it is old. The charts are old. And I like us using what you guys know. So we see that candle. You guys take a close look. We see that week came into the zone, the 50% retracement, and pushed to the upside. We see market candle closed below. It closed below the order block. Now you take a look at what happened in the second. The second candle came and retested the zone again. So that's what I mean by a confirmation, secondary test of market. So that's why if the person maybe was a sniper trader and placed his break even there, they could have hit him. So at those secondary tests, that's where you can take entries. But I like telling people that we are always busy. We don't have time for Simanyanga. If something is correct, it will be correct. If it's wrong, it will be wrong. So, and other blocks are things which I am always sure that they will pay you. So, here we see markets pushing and hitting the take profit around that price. So, we see market was a valid one. Why we took entries at 50% present zone and got it. Now, most of them are eyeing and asking me, sir, why isn't this other respected? Now that's the question people are asking. Because that's even it's another point. It was unmitigated, the federal gap was there, but there's a last factor I was telling people that you should consider first. It should not come from a mitigated zone. If it's coming from a mitigated zone, don't risk your money. They will hit that money to an extent that you won't even be left with a single point. Don't risk yourself. And as long as you don't risk yourself, guys, you're always among the big league. You guys might have come in your big league. Okay. Now let's take a look at another example. An order block, a valid one. We see was it valid, and we see if we can take entries. So now this is another order block here. We're going to list the factors of a valid order block. We see if this could have been by the way perfect order block. Those of you want it. Now we see what I was telling you. But anyways, we shall break it to a lower time frame and see. So we can either take this week or take the whole week here. Yes, you can either take this one or take this. Even though the most perfect week was this. Yeah. But if a trader goes extra mile and consider even this, I don't care, because even though the stop loss will be big. Now we see an FVG being formed inside there. And guys, to answer your questions that most of you maybe have inside, even if the FVG is filled, as long as it was formed, it's a valid one. So that's an FVG. We see a change of character on the upside because these were downtrend structures. We saw market trying to dominate with the downside. I wouldn't say these were uptrend continuations. So these were like downtrend structures. So I would consider that as a change of character. Now, this is where money wants. The market, the second factor, like I said, guys, it should not come from a mitigated zone. Now, most of you are going to ask me, isn't this a supply level of mitigation? Not so. But guess what? Market itself here, itself broke that supply level. So it means that that level, even not to confuse you guys and show you that this level had no effect. Remember, we said unmitigated what? Unmitigated zones. I want you to take a close look. This zone is not unmitigated. Right? We saw the first week knocking there, and we saw another week, another candle coming. It means that this zone became invalid because it's already mitigated. And mitigated zones, like I said, they don't scare us. So they can always give us pushes to the upside. So we saw market having the 5 factors of an order block, and it's a one-time use, of course. That factor, it's not that a lot of people need to concentrate on it. Concentrate on these others. Now let me show you where the confirmations were. Since it's 1 hour, like I said, first break is structured 15 minutes because, like I said, I have my different correlation time frames. But if you get yours, that would be even a valid. So here we see something very special. We see market forming a hammer to the upside. Sorry, this. So we see market forming a hammer. Not so. So within this hammer, I know a lot of people you like taking entries at a week. So you can keep breaking your structures to lower and lower time frames. Can now the question in your heart, what's a confirmation? Guys, confirmations they are like, for example, you say I need this to occur in order for me to enter. Those are like confirmation. So now most of people who trade my strategy have already seen that this zone was already at the flip level of the market. Yeah, a lot of people who trade with me what you call the pivoting points, you can see already market was at the pivoting point. Where the block is now the confirmation why it was here. It was at the second retest. Guys, I told you, be aware of a retest. We saw in the other chart that there was no retest at all. It was one retest. But here, you see, we see market at this candle knocking the zone, pushing back to the upside, meaning that it has retested. Not so? Now we can see something very beautiful. The second candle came in to retest the second time. That's why I told you guys that markets, most cases, they retest zones 2 times. So you can always put a stop loss there, aim a couple pips to the upside, and you get a nice win rate by there because order blocks are very, very effective. Now it's time for me to give you guys another hit on order block. So we could have maybe measured there. We measure the second supply level, which is around here, the resistance level. We take TPs around this price, and definitely they had to hit it with a big smile, and that was the value. So hope you have seen that when we went to the lower time frame, we got our confirmation, which was the second retest, or the engulfing or the hammer. So it was upon you to say, I'll take entries here, here. It's upon you. Now, there's something I want to tell you guys that a lot of traders buy their use when it comes to that. Now the question is, if a valid order block is hit, what does it become? I know most of you know it. It becomes a breakout block. You have had a lot of traders tell you this strategy. Most of them don't even know it. But it's called break and retest. They say you use break and retest. That's what they use. Break and retest can occur in different ways by now. But using a breakout block, let me show you what a breakout block is. When markets, for example, form a valid order, when all the factors were very correct, by the way, all the factors, then they break it. This zone does not no longer qualifies to be an order block. It now qualifies to be a breaker block. It's called a breaker block. It's now called a breaker block. So when markets come back to retest the breaker block, you can always take short positions around the breaker block zone, put some stop loss cover pips here, then you can always take entries at the breaker block and stand and start a new downtrend structures. So most cases in downtrends, breaker blocks are made several times. So most cases people call them the retest and break and retest strategy. Yes, a lot of traders have seen them, several of them. Let me give you an example of a break and retest. Here we see market forming an order block here. So this point it didn't reach, it formed an inducement here. So we go, let me even reach it up here. So this point indirectly didn't reach. So here we see the same order block, market broke a candle to the upside to form a change of character. Now most of you want to say this is a false breakout, but in VOSS, those of you, if you want to check it out, I know most of you use Lucas Algor's theory of break of structures and change of characters. So if you test them out, this is a change of character, by the way, because in the lower time frame market broke out. Yes. Now this was a valid one because here we see presence of the fair value gap. All the factors were valid. And then guess what? Well, we knew market broke it with a very huge momentum, hitting our stop losses. Now, like I said, always take advantage. You can always use secondary tests, or you can use 50% of the zone. Take stop loss a couple pips to the upside, aim down. You can always aim down and maybe aim different demand levels. Like for example, this was a demand level because even though this is the wonder chart has spaces, you can always aim there and get a very high win rate. So we see market coming to this side because we see the wick here, it moved down. So this was news. So we see market came and afterwards it had a profit. So you can use the two things, a breakout block and an order block. When your order block is broke, be happy by that. It's your time to shine. So you will use that area as a retest and go to the upside. But don't forget you need to get a proper breakout. That's the first factor. And a proper breakout is say it is of course defined as market. For example, here it's sellers are dominating this zone, and the market does not push back to the zone. It's considered as a proper breakout. But if market had pushed back with a candle here, you see breakout, and you have a very high chance that bargain up. So that's all when it comes to order blocks and breakup blocks. So, unless I have questions about a breakup block and an order block, I would like to give you the thing about liquidity, how to consider variety zones with liquidity, and it's a lot of meters strategy. I've seen a lot of traders using this strategy, a lot of them. I won't mention their names, but using it, and I'm giving it for free. I don't know why they teach it for a lot of, and yet it's a simple strategy. So, do I have questions about order blocks? So as we here to talk, you just press on that mic, it will raise up a hand, then I will allow you to be unmuted. You ask a question about other block or what you knew about other blocks, then I answer you. Then if there's no question, I'll of course have to rush into the what? We have to rush and look at the liquidity, how to use liquidity as a concept itself and so if there's a question, you can hurry. So there's no question. Okay. Yeah,
Yes,
and you can
hello,
ask
good
a question.
evening. Yes, hello, good afternoon, everybody. So my question was like, if I'm to ask like on a higher time frame, if I'm to see like a BOS, does it have to happen on a higher time frame or on a smaller time frame concerning order blocks? Or like looking for the second retestment, second retest. Yeah, that's the
Okay,
question.
pardon your question. Pardon your question.
So my question was like this, eh? Above on an order block, let's say like we're in an uptrend, eh? So the order block, you have to retest on it. Do I check on this retest on a higher time frame or it's on a lower time frame to get confirmations? Because like the second retest where you say that the wick of the candle had to retest on the order block, then it pushes up. That retest, does it happen on the lower time frame or on the higher time frame?
Oh, all right. I've noted your question, and it's a really nice question. Now, what I want to answer is that most of you have seen what we were doing. The time frames themselves, the reason why they don't give us confirmations, they take long. They take long because a 4 hour candle in a day we can see 4 hour candles a day. Most of you, those even who trade up tonight. So it means that a day itself, you don't see a lot of 4 hour candles forming within your eyes. You come back when some are forming. It means that you can't get a secondary test in a higher time frame. Why? A higher time frame itself would take time to do it. But in a lower time frame, for example, 15 minutes, 5 minutes, they give you that. So you can always consider secondary tests in a lower one. But there's a but there. It does not remove the factor that the order block comes from a higher time frame, which is 1 hour. But confirmations have been attained in a lower time frame. So that factor is still constant and does not go away. So it means that if I get an order block in a daily chart, for example, you can even get an order block in a daily chart. A confirmation will come from 1 hour, which is a lower time frame than the daily chart. So hope you are picking my point. Because if you can't get the order block in 1 hour and still get the confirmation in 1 hour, it will take you time. But you yourself, for example, Gideon, you can state all the factors of a valid order block in 1 hour, get your POSs in 1 hour, then in a lower time frame, get your key confirmations, secondary tests of market, maybe candlestick formation patterns, a lot of things you guys consider in getting confirmations. Even though for us who trade pivoting points of market, you don't get confirmations because a confirmation for me, it will take time and I need to get the other sniper. But if you also have a confirmation, it's also a nice way of trading, by the way. You can always get confirmations. So Gideon, to answer you that get in a lower time frame, since it forms faster, get your confirmation in lower time frame, but get the order block in a higher time frame. So that was my answer. Now let's move away to the question, to the liquidity, which is by the way one of the most important topics today, because I always have the most important ones and the last ones. Now, most of you have had liquidity a lot of times. Let me draw something most of you look at and people tell you, inbox with $100, I teach it to you. I'm going to teach it for free. Most people, you see them having this and they mark here and they mark this. Most of you have ever seen it. Let me show you what people do when, most of you, I know it's not your first time to see this type of thing. Most people, even their mentors, I know, they teach this same thing for a lot of money, but to me it's small. That's why I'm giving it for free. I think most of you are well covenant and are well vigilant with that type of structure I've drawn. Most of you have seen it, a lot of mentors making it. But my liquidity, after the liquidity fetch, we consider that to be valid. Now I'm here to expose and show you how we can as well use it and understand why they consider that. The first thing I want to tell you is that market itself, I say it proudly, market moves because of liquidity. That's why last time in my YouTube, I told you that if market does not get liquidity, you become liquidity. Yes, if it does not get what it wants, you become what it wants. Because market itself should do two things if you know your zone is very valid. It should have fetched some liquidity or swept some liquidity to aim at the liquidity zones. Let me give an example what I mean. We see this car formation. Now you ask yourself, we have two traders. A trader is taking entry there, and we have trader B, who is trader lucky. He's taking his entry here. I'm also making it to drop because we want to see. Anyways, I'm not going. Let me push them back here. Let me push them back. Also, let me bring this here. So we have two traders. Please, you guys will testify and tell me. According to if you were market, who would you hit? We have this trader. This trader is Matrix. We have trader Matrix. He's taking his entry there. This is Matrix, and maybe we also have Gideon. Okay, we have Gideon. I don't know if the SP is like that, but we move. Let's move with that SP. So we have Gideon's entry here and Matrix entry. Now I know most of you are now saying, the two structures are not the same. Yes, it's not the same. Now the question is, if you were market, on the two, who would you hit? Definitely the biggest answer would be you would hit Matrix with no questions. Why? He didn't offer anything. I have not offered anything. So why would my area be valid if I've offered zero things? Remember, market moves, as long as by the way you understand this term, moves because of liquidity. So it means that if it moves because of liquidity, it should get it in order to move. It's fuel. Now ask yourself, Gideon takes entries after giving market several liquidity fetches. Matrix gives market, for example, Matrix enters the trade without giving market any liquidity fetch at all. Of course, even if I was market, with no mercy, I would definitely hit Matrix. Why? Because if his zone did give me liquidity, his zone will become the liquidity. Yes, I will now use his zone as a liquidity fetch. Then from there, I move to the downside. That's why you see a lot of traders, they're like, but sir, market comes to my zone, it hits my stop loss, it goes my direction. Now I'm answering you. It's because you're offering nothing. You're taking entries of Matrix instead of entries of Gideon. Take entries where market has to fetch liquidity. We shall look at it in a live example. Because this entry you are seeing here is, for us, we call it the professional entry. Yes, a lot of traders use this, by the way. It's not your first time to see it. If a trader gives market what it wants and take entries at a safe zone after market getting what it wants, he's already a professional and knows what he's doing. Now, welcome to the newbies matrix. He's entering because he sees a valid supply, but not offering anything to market. That's why they keep crying, and I'll keep saying that market this is gambling, bichi, because I'm entering without giving market anything, yet I want money. So, and liquidity, those of you have taught it multiple times that liquidity itself is a slang to mean money. So it means that if market does not get money, you become the money. So so we see that two entries. The first entry is always the valid one. So this was the true entry. You know, I like using emojis to show the valid one. So this was the perfect entries, and we are going to see how to mark such entries and become a very successful trader when it comes to entry taking. When it comes to liquidity zones and all that, guys, when it comes to liquidity zones, guys, this strategy does not call out for any, it works for supply. No, I will even show you on resistance, I will even show you on flip zones, all strategies, it works. And next Saturday, of course, we shall look at the dynamics of a Fibonacci, which I'll teach about the Fibonacci tool, and we see how the Fibonacci is very effective and how to use it. Now, if you take a look at here, market, let me tell you what story one tells us. We see here different levels were created, but these levels don't fetch liquidity. So we see these levels here, they don't come to sweep themselves, they don't take liquidity at all. And guess what? They are creating imbalanced structures, but imbalances are being filled to short trend continuations. Not so. When market comes, it first eats this and says, wow, thank you. It comes and fetches this and it's like, really, thank you, Gideon. It comes to the real entry. And guess what? Those of you who have already seen it and identified it, these are already inducements of market. So it gives us two things: that an inducement itself is just a liquidity fetch of market. That's why last time when I was teaching, I told you that, guys, never take an entry that didn't form liquidity. And guess what? When it comes to Matrix, who claims that Forex is a scam, he takes entries to where market has no liquidity. Okay, let me ask you, what is it going to fetch here? Nothing. So it's going to fetch his stop loss and be hit. Now let's take a look at here. Let's take a look at a live example. See, what am I saying? Is it true? Can it happen? Can it be valid and all that? But you should note one thing, that in the market there's no holy grail strategy, and they can violate your zones several times and times. You can use 4 hour, but I'm a big fan of 1 hour. So people who use 4 hour, so let me use another pair, because let's use GBP JPY, which is the favorite pair of everyone. I know people, they're a big fan of GBP JPY. So those were different entries too. Let me remove them. Now we were learning about different liquidity fetches. Let me get here. Okay, we have this zone here. It was a valid zone of entry. So we have a supply level here Let me mark it very well. No, I don't want to mark this zone. And if you get such zones, you guys are going to become very big traders. I'm going to show you now here. Do you see this zone is liquidity? But you're going to see that this zone was a valid one because it already formed other sectors of liquidity. Now let's see if what we wanted was formed. We see market forming what we call the trend line liquidity. A lot of people call it trend line liquidity. We see market here formed the liquidity I was talking about. You see here, we see liquidity being formed. It means that market, if a trader, let me show you what I was meaning by matrix's trades. Matrix takes entries here at this level. And also this level, by the way, was respected for a couple of pips here. But it was broke. Why? I offered less. You see, this liquidity is very small. Let me show you why I say it's small. We see even this week first grabbed the liquidity. So it's already small liquidity. And guess what? Market was busy there laughing. It was like no matrix saga. Because we see the level itself is now a very big liquidity. And like it or not, if what you're offering to market is less than what it's getting from your zone, you will be the liquidity. I promise you are going to be the liquidity. But we have trader B. He considers his valid entries after giving market multiple liquidity zones. You see market bouncing to the upside. Like I told you guys, like it or not, market gives entry. It gives what we call the secondary traces. You can always take entries at 50% to be have tight stop losses. Stop loss tight. Now tight stop losses, couple pips above, then you can also we can always swing trade. Most of you even call it a swing trade. You can always aim to maybe levels down there. This is 400 pips and that. You aim up to maybe here around here. Can maybe aim there. Maybe around there, maybe somewhere there. But even market, I think, hasn't broke. It just came back to retest this zone. And that's why I still expect GBPJPY to sell. Yes, because we see multiple liquidity being formed here and market is still coming for it. Now, the major lesson I was teaching you guys was that if you offer something, market does not want, become that thing. Let me give another example, which was a valid one. We see here we see a supply level, not so. The reason why this supply level was a very valid and successful supply, I'm going to give you guys the reasons. Even this zone, after it was broke, now that people use pivoting points, we are going to see where our entry was. Now, let me say for the people who use maybe order blocks, such things. So we see market. What did we offer? You see what the trader offered. He gave what we call the liquidity on the trend line. He marked his liquidity. All this liquidity was valid. I'm going to show you where matrix entries are and where these traders entries are. We see this is a very nice liquidity for market fetch before the down move. Now we have matrix. He thought this is a very nice supply, by the way. He gave a nice supply level for market. But guess what? Like I said, if what you offer is very less, the whole of this liquidity was invalid. Why do I say invalid? We see this week here, grab the liquidity here. It means that that liquidity does not exist. The only trap zone you could have got if you wanted a matrix zone entry was this supply, not the upper one, because the upper one came in after market grabbing liquidity. Not so, we all agree on that. But here we see market forming liquidity here, and maybe some liquidities at this zone. Then market, after you see what he did when he tapped and we gave it liquidity. He tapped and it was like, thank you, and it dropped. But when trader B, please man, who is me, I said I would take entries here. Guess what happened to me? When market came, already this liquidity was taken. Then it just came to my zone like that and swept it. Why? There was nothing to fetch. Because if I take a look at here, this liquidity I was offering, this week itself had took liquidity at this level, I took liquidity all this side. So I was only left with this. Now I always like to ask traders, compare and see. If the liquidity you are giving is less than what's there, you are going to be the liquidity. We see liquidity at this price level here. Not so. This level here, we see liquidity there. So definitely, even the blind people can say that the liquidity there is less than the liquidity which is going to be offered. So it means that, of course, they had to break it to the upside. Very volatile. It had to give a very volatile move to the upside. Then guess what? When it came here, we see liquidity here, which is true, liquidity here. But the liquidity you are giving market is quite a lot. It means that if you're giving it the whole of this trend line liquidity, which hasn't been swept, yes, because to be swept, it had to make this move to the upside and sweep this liquidity. Now we see market didn't sweep it. It just came after sweeping it and it came to our zone, it had to move down. So you gave it a nice offering. I'm going to give you another example because I want you guys to understand it very well. Now we see two zones here. We see here an inside order block. Some people call them inside order blocks. You can call them demand levels and all that. We see this zone. What did it offer? It offered liquidity here. Not so? This is the liquidity. And also liquidity, you can say they were the inducements of market. The reason why this zone market never bothered to come here, it had already fetched what it wanted, which were these zones. Once it tapped in the 50% zone, we saw market bouncing to the upside and never came back. Because guys, if market, like I said, if it doesn't have the reason why it's coming, it won't. It just be the column, it will just be there. But you see here, for example, people who would like to take entries at order blocks, this level in the upcoming time, it will be a valid one. Not so. Let me give you the reasons why it will be a valid demand level. If you use flip zones, use the same concept. Get your inside quants model here. Get your liquidity, which is not swept. Aim that. For example, we see here, market has offered this. That means that if GJ retraces and sweeps that liquidity, we might look for some up moves and also maybe gain something like 100 pips to 660 maybe. Let me see how many pips are here. I think they're 100. You can take your entries here since there's liquidity you're going to give at this level. One other people be now. So you can maybe aim some small pips. You have to have profit target. So you can aim something like 100 pips or 200, you close your day. Also, this level will be a nice supply level for market. Why? We see market is already giving us options of offering this price. So if we get a slight move to GJ upside, it comes back without knocking. It will give us a nice inducement to take entries at this order block or the demand level. We go to the upside. So those are different ways to which traders use these supply levels. Like I said, guys, it's not your first time to see traders marking it and they're like, this is the liquidity I'm offering and they're like, the entry will be here. Then after sometimes, stop loss hunt in Agava. Like I said, guys, aim the sharp moves. But even this was a valid one, by the way. Yeah, that's the same level. This was the same level, which was valid. But stop loss hunts are things you can never stop in market. Like I said, guys, don't forget, we don't have the holy grail. The holy grail strategy, I don't know who has it, but every strategy is correct. Just backtest it out and check out. You can always add your own things and all that. So that's when it comes to using liquidity as a mode of entry. The first factor I've said is that never and ever take an area which doesn't have anything to take. The area here, don't take it. Also, another factor I've said is that never and ever take an entry which, yes, gave liquidity, but the liquidity you are giving is less than the liquidity that is on your zone. Also consider that invalid, and so on. So you can always consider you can always consider such when taking different entries of market. And guys, like it or not, using the inducement method I gave you guys will give you a high win rate. Those of you are still looking for strategies, and stick to one strategy, by the way. Don't jump from demand, you come order block, you come now you are using liquidity. No, stick to one strategy. So you shouldn't forget that if I'm not offering anything to market, my account becomes the liquidity Okay, they grab it as liquidity. So your account becomes the sacrifice for market. Yes. And a lot of traders do it. Can you see? You ask yourself, a trader who took an entry here, a trader who took an entry here. You want to tell us that you gave this as your sacrifice? Yes, market gave you some small pips down, but why? Because what you're offering is less than what you're giving. Because we see here, it's almost the same as this. So, but here, the reason why I've told you guys this will be a valid zone of entry is because we see market forming the downtrend line liquidity here, downtrend line liquidity. So which will be a nice mode entry. So you always take entries at that price. Eh? Yes, those who will take it, they'll take it, guys. So that was all about liquidity and order blocks. So that's what I had for you when it comes to liquidity and order blocks. So